Hey everyone, and welcome to another episode of Dirty Money. I'm here in the studio with Mike. How you doing, Mike?
I'm doing good. How about yourself, Ben?
I'm good, and you got a bit of a different background today, I see.
Yeah, made it to the Sunshine State. It's only 100 degrees here every day.
Nice, nice. Well, we've got a pretty interesting show coming up for you today. So we got to talk about the big news this week, which was, of course, the U.S. credit rating just got downgraded, which tanked the market on Wednesday. We're seeing a little bit of recovery towards the end of the week, though. Then we got the latest meme stock, Tupperware, up over 400%, probably more by now. Although some traders say that it's not a meme stock. We'll tell you all about that a little bit later. We're going to be talking about the most expensive and the least expensive US states to live in. So stay around for that. And then we've also got some information about a new song royalty investing program.
It's an exchange. It's
It's an
literally
exchange. Wow.
SEC certified.
Wow, that's good. Okay, so you're going to tell us all about that. I'm interested to hear about that. And then we've got also Iran shutting their entire nation down for 2 days. What was it? Because of heat, I think it was.
Yeah, 123-degree heat.
I'm interested to hear about that too. So let's first start off with talking about the US's credit rating. And before we do that, though, if you're listening on any of the major podcast platforms, do give us a 5-star review. Share this episode with your friends. And if you are on any of the micro content platforms like TikTok, like YouTube Shorts, or also Instagram, you can follow us at Dirty Money Show is our handle on all of those. So the market tanked on Wednesday. We got this CNBC article here. NASDAQ was down over 2% on Wednesday. And that was because Fitch Ratings, they actually downgraded the US credit rating. So Fitch Ratings is one of these agencies. They downgraded the US's credit rating from AAA to AA plus, which, it still sounds pretty good, doesn't it? AA plus.
I mean, it sounds all right.
Right. I mean, I think when I was a kid, the highest grade was A plus or A star or something. So AA plus still sounds great, but it's a downgrade for the US. And let's have a look at the reason. So this is their press release from Fitch Ratings, and I'll read you out the reading. So the rating downgrade of the United States reflects the expected fiscal deterioration over the next 3 years, a high and growing general government debt burden, and erosion of governance relative to AA and AAA rated peers over the last 2 decades. That has manifested in repeated debt limit standoffs and last minute resolutions. So, what they're talking about is, how in the US, Mike, we always have those debt ceiling crisis negotiations, right? They're always negotiating the debt ceiling and they leave it to the last minute.
Yeah, the political tool of debt negotiations
Right.
seems to be the constant medium between the two parties, left and right.
Right. And they intentionally do that. I think last time it was like the Republicans wanted to negotiate on it, and Biden purposefully ignored them for like months until it was like a week away or something.
We don't know if that was on purpose or if he just didn't see what was going on.
Right. Yeah. Both sides do it, though. Don't think we're just attacking one side. Both sides do it. They use it as a political tool. And it's interesting. Guess how many countries in the world have a debt ceiling? It's not very many.
10?
No, even less.
Really?
2. The US and Denmark are the only 2 countries that have this policy where they make a debt ceiling that's like enshrined in law, and they have to pass a new law to borrow more money. It's only the US and Denmark. It's
So
pretty
Canada
interesting.
can just keep borrowing and borrowing and borrowing?
Other countries, yeah, they don't have to pass a law. Maybe they have some process internally, but they don't have to do like an act of Congress or an act of Parliament to be able to borrow beyond their debt limit. It's only the US and Denmark that do this.
I guess
Um,
that's kinda good, actually. It should be a little bit more thorough, I think, than
yeah,
just saying, "We'll spend another $10 billion more than we have next year."
right.
Uh,
Without having to debate it in their Congress or Parliament or whatever. So yeah, you could see both sides. You could see it as good, but then other countries, obviously, their process of borrowing is more streamlined. They can just do it without passing a law. But anyway, so of the things that they quoted, growing debt, and also with that debt, you have growing interest rates because you have growing interest payments because the interest rates are going up. Okay, so the US is paying much more interest on its debt now. that rates are higher. So in 2022, the US government spent $476 billion just paying interest on the debt. And that was up from 352 billion in 2021. And the Congressional Budget Office projects that in 2023, the US will spend 663 billion just on interest on the debt, which is it's kind of spiraling out of control. Although it sounds bad, but actually the historic high interest to GDP ratio was 3.2%, and that was in 1991. So we're still not there yet. We're about 2.5% of GDP is our interest payment, but it's getting close, and we're getting close to the military budget. I mean, it's 600. I think in 2024 they project $745, $45 billion, $745 billion on interest, which is pretty close to what we spend on our military budget. So yeah, it will hit that historic high 3.2% of GDP by, I think it's 2027. So in the next few years, which is crazy.
Yeah, that's an astronomical amount of money when you really think about it. The other thing that I was thinking about is why is it so in Powell's best interest for his nation is not to raise the interest rates and create deflation, but to stay on the course, basically he's going to create deflation, keeping and raising interest rates, where the dollar is going to start to actually gain in more value than lose value.
Well, if he manages, yeah, if he takes it that far, although probably because their target is 2%, isn't it? Inflation. So probably once he gets to 2%, he'll start lowering again.
I mean, we're getting close to it. I would say that uh, the the word is all the way out till October. Keep raising, keep raising. So, and now with this, and knowing that our credit rating, the other thing is what did Moody's and S&P?
So okay, so Moody's hasn't Standard and Poor's and Moody's haven't decreased it yet. Fitch Ratings is the one that so this is only one credit rating agency that did this.
So you think Moody's will downgrade and S&P will too?
I don't know. Yeah, I'm not sure. Maybe not.
It just seems kind of ridiculous. The likelihood of us defaulting on our debt is absolutely zero.
It's zero. Yeah, it's zero.
It's just not going to happen no matter what. And so what this really does is it allows a play for people who are in the market to go, all right, buy the dip.
Yeah, buy the dip or buy government debt, U.S. government debt.
Yeah, one of the two. I mean, right now, Apple stock it dropped pretty significantly.
Didn't it? Yeah.
Yeah, and now you have a lot of different stocks that kind of just fell off. And when you look at it from a timeline perspective, it's not really that much. It's still up year to date, but nonetheless, there's an opportunity that's knocking. Not again, not financial advice, but there's something there to be had right now, and buying and doing a swing trade and things like that. So that's the advantage, and it makes me wonder if who's in charge of this Fitch grading company, and does BlackRock have anything to do with it? No, I'm just kidding. Seriously though, like what made them say this? They just came out of the blue and kind of said it. No one really expected it to happen.
Right. Yeah, it was kind of out of the blue because there wasn't any event that triggered it. It was sort of over the last, they quoted the last several decades and the next 3 years. But I mean, we're seeing how much interest the US is paying. The budget is going to definitely be tight over the next
Well,
few
yeah,
years. So
well, it'll be tight, but at the same time, we can just cut a lot of our spending. I mean, that's the biggest problem with the United States budget, is that there's not open spending. We don't know what they're spending money on. We have no idea. There's so many covert operations and secrecy inside of our government that we don't know where all this money's going. Where does it go? Where does all the money come from? We know that it comes from our people. Where does it all go? No one has
yes,
any idea.
that's true.
You know?
Well, let's talk about some money that is going somewhere, although we do know where it's going. And that's Tupperware stock, which has skyrocketed. And I thought this was really funny. It's like the latest meme stock, Tupperware.
Yeah.
Why don't you tell us about it, Mike?
I mean, it is the latest meme stock, but it's interesting to really look at what happened to them. So in April, If you're not familiar with Tupperware, Tupperware is like the original Avon. Your grandmother or your great grandmother might have actually gone and sold Tupperware at Tupperware parties in the neighborhood in the 50s and 60s, 70s. So it's like the original Avon door to door selling.
And if you really
Most,
don't know what it is, it's like, little boxes to put things in. It's like
yeah,
plastic boxes to store food in.
yeah, it's all about food storage and making sure that the food lasts longer. Before there was nobody really in that
Yeah,
market at all, and so
airtight.
yeah, over the last the last few years, the whole company's just kind of collapsed. I mean, they were trading at $37 a share in January 8th, 2021, which I thought was pretty crazy because the stock was at like 60 cents in April, and they were talking about bankruptcy and a lot of different things. And now, um, like most of the meme stocks, the AMC's, the Bed Bath Beyonds, the GameStops, the retail investor, me, you, and probably most of the people listening to this, uh, come in and say we're going to short your stock. And so there was about a 25% float on their stock up to July 14th was shorts. So
Oh, okay.
so
Yeah.
a lot of this was in the background going on. Now, interestingly enough, is they in early July they hooked up with our favorite investment firm. Can you guess?
BlackRock?
You got it, bingo. Yep, their investment partner is BlackRock. That's what came through in early July, and for some reason or another, this is when that stock started to really jump. But over the last month, it went up 400%. I mean,
That's great.
this is on a tear, and so it's interesting to think about. But before all this happened, they were given notice by the New York Stock Exchange that you're below our 50 million cap. You've had below 50 million market cap for over 30 days, and your stock's trading at $1 or less, which is below the NYSE's threshold.
Yeah.
So they'll kick them off the exchange. So it's interesting to really see what happened here is now their stock doesn't skyrocket, but their stock just takes off and quadruples itself, and now they're able to restructure their debt, which they did yesterday. They restructured $150 million in debt. They got an additional $21 million in debt financing. So it's really interesting to look at this whole picture and know that BlackRock jumps in, and all of a sudden this gun whoop, completely twisted upside down now, and they're able to refinance their debt and everything. I'm not saying it's a bad thing. It's just it's a very unique proposition to look at and say, you know, it, what happened?
Yeah, I'm looking at the stock graph. I mean, this one's a little different to GameStop and AMC because they were trading at this level like a year ago. They were actually trading about double the price,
Right.
over $10 a year ago. And
Yeah.
they've come down all the way down as so almost being priced for bankruptcy. And now their stock has gone back up to somewhere near normal levels. It's not the same as GameStop where it just exploded from $4 to like $400. Um, it's a little more it's a little more ordinary, even though you've got some high percentage gains in a short period of time.
Yeah, it's not as much meme as people would like to think.
No.
25% is not 90%.
Although people on Wall Street Bets are talking about it, so
Well,
they're
yeah, I
they're
mean,
definitely getting in on the action.
I wouldn't mess with it now. It's already down
Yeah.
from day over day. It's probably down 50%. I mean, I think the train's taken from this one, that ship
Yeah.
sailed. So I wouldn't, and not financial advice, but I wouldn't play with it.
Yeah,
Uh,
this is not something to, buy, after the fact.
you're
You need
right.
to understand the hypothesis beforehand and put your money in and hopefully you'll be lucky. But don't do the, like, catching a falling knife thing, buying
Bad
in.
idea.
Yeah.
Bad idea. But there's also another company that kind of went through a similar yellow trucking, but they only went up
Okay.
87%. But if you look at so if they've gone up 87% in the last month, if you look at Facebook, for example, or Meta, The stock went up 70% from March until June.
Right.
So so
And
and
it's a proper company with good credentials.
precisely. So that's kind of the evaluation that you look at is to say, well, I mean, yeah, it's no GameStop, it's no AMC where you're going, what just happened? I don't think this was a coordinated effort. I feel like there was, oh, this is going up. We should probably try to short this real quick. And then a bunch of people paid attention to it. But the short was primarily done from the beginning of July until the middle of July. BlackRock jumps in the beginning of July. I don't know if there's a
Okay.
way to calculate and to find out what's going on. I'm not a lawyer, but fundamentally, there's definitely a huge question mark there as it's turned around somehow. Good marketing,
Right. I
but
was I was just looking on Reddit, and someone saying I don't know, someone posting about how much they made on Tupperware stock, and then someone posts Tupperware is a cancerous plastic box. Go for Snapware, glass leak proof from Costco instead.
I think I have both.
I got
Actually.
Snapware. It's better actually. It's glass. Only the lid is plastic. The
Yeah,
part
no,
the food actually touches is glass.
I have those too,
Maybe
but
we can buy their stock instead.
I doubt it's even traded. Probably privately held.
All
Uh,
right, so I want to talk about, because speaking of money, well, this whole show is about money, but anyway, I want to I want to talk about the most expensive states to live in and the cheapest states to live in, because this is kind of a little fun segment. So the US is actually the 26th most expensive country in the world to live. Okay, as the 26th highest cost of living, and of course, there's all different ways of working this out, but according to some measurements, it's the 26th, but it varies from state to state, and it can vary a lot. So, Mike, why don't you see if you can guess which state is the most expensive in the US? Try not to look at that.
California?
Well, it's good guess, but no, it's not. It's Hawaii. Although when you think about it, it makes sense, right? It's an island right out in the middle of nowhere. A lot of products have to be shipped there. It's mountainous, right? So there's not that much. Maybe there's not so much land. I don't know. Maybe there is, but anyway, I can give you some stats about Hawaii. So it is the most expensive state to live in. The typical home there costs $730,000. The average rent in Honolulu is $3,500 per month. Groceries are 50% more than the national average. And yeah, a lot of things, and that's because a lot of things have to be shipped to the island. And also how it's run, it is a Democrat-run place, and those places tend to have higher costs associated with them, higher taxes, and more restrictive, policies and stuff. So anyway, that's the most expensive state. It makes sense when you think about it, right? With an island being an island in the middle of nowhere. Do you want to guess the second most expensive state?
California?
Well, it's debatable. So some surveys, the one we're looking at now, actually gives New York as the second, and California as the third. Although some other ones give California as the second, and New York as the third or fourth. Massachusetts is already up there, is also up there. So we'll talk about New York. New York City is the most expensive city in the country, and that distorts the whole state. Okay, because if you live in upstate New York, it's actually a lot cheaper. And you can compare here the cost per month for a 2-bedroom apartment in New York State. The average is $1,659 in rent, okay, per month. A similar unit in New York City, 2-bedroom apartment, $5,874. I assume that's Manhattan. Isn't that astonishing?
Yeah, that's crazy. That's like $1 million mortgage almost.
Yeah, that's rent though, rent. So
But I'm
almost
just
6,000, but yeah, comparable if it was a mortgage. Almost 6,000 a month in rent or mortgage. Crazy, huh?
wow. That's
Yeah.
no thanks. Live
No
in
thanks.
Jersey.
And then California, your favorite. That was either third or second, depending on which survey you're looking at. There's a few different ones. Guess which one was the cheapest cost of living?
Alabama.
Oh, you're close. You're close. So the cheapest was actually Mississippi, And that's based on a couple of different surveys that I looked at, one in Forbes, one in this survey that you're looking at now. You can see Mississippi right down the bottom of that chart. But most surveys seem to name Mississippi, Kansas, and Alabama as the three cheapest. Actually, according to Forbes, those are the three cheapest. So Mississippi, the average family home is just $140,000. Compare that with Hawaii, the same home was over $700,000 to purchase. So
4 for 1.
Mississippi, right, exactly. I mean, Mississippi, Alabama, these places are pretty good. Have a look at the Forbes article. The link is in there because that gives you the 10 cheapest states. And I think it's funny how they give you the pros and cons of each. So, like for example, Mississippi, there's a lot of pros, low housing costs and stuff, but then you've got highest poverty rate in the country, fewer job opportunities, poor education system, healthcare. Some of these are kind of funny, like Kansas, cons, frequent tornadoes and extreme droughts. Alabama, subpar healthcare. And I think, where was it? Oklahoma, the cons of it, rather boring landscape. It sounds like something a British person would say. A rather boring landscape. And tornadoes as well. So
I lived in Mississippi for a little bit
oh, you
and
did?
worked
How was
there.
it?
It was horrible. I won't
It was
lie.
horrible.
Yeah, it was one of the worst places. I mean, there were some nice areas, but I mean, I was in Jackson, which is the biggest city there, and it was still pretty rural, not much going on, dreary. It was
Okay.
always hot. I mean, and there was, if it's hot and you're in Florida or if you're in Hawaii or you're in Texas, you can get to the ocean pretty easily. But when you're
Okay.
in Mississippi, it's like there's uh a little bit of ocean down at the bottom, but otherwise it's just hot, swampy,
Yeah.
buggy, uh, I don't recommend it, but they do buy Nissans. The highest value for a Nissan resale is in the state of Mississippi. I
Oh,
found
really?
that out while I was living there. Yeah.
They love Nissans. So actually, as you scroll down this list on Forbes, you do start to get to some ones that look a bit better, like Georgia and Tennessee, which are pretty affordable and have something like Tennessee. I mean, weren't you just in Tennessee the other
Yeah,
day?
I was in Tennessee last week. This was where we recorded our last show. Uh, I like Tennessee, Nashville, Knoxville, Memphis.
I
They're
guess if
all
you lived in Nashville, it would be probably the most expensive place in Tennessee to live, but it still probably wouldn't be as bad as New York City or LA or anywhere. So, yeah, Tennessee, when I researched states to move to for low tax rates, Tennessee was definitely one of the best ones that I found for a combination of reasons.
Yeah. Tennessee is that there's lots of people that move there for those reasons, and the land's relatively cheap. You can get a lot of land,
Right.
just like Georgia. Georgia,
Yeah.
Tennessee, you get a lot of land. You're not dealing with snow and
Look at that. Pros. The Tennessee says pros, right? Housing is cheap. And then whiskey. Whiskey's one of the pros. Some people move there just for the whiskey, right?
oh, that's great. Whiskey is part of the reason. Yeah, I guess. I mean, Tennessee has dry counties, actually.
Yes, not as much as Alabama, though. I think that was one of the cons. Actually, that was one of the cons on Alabama. Said some, many or Missouri or Mississippi, maybe it was, many dry counties. Yeah, I don't care. I don't even drink, but
Me neither.
if you're
That's
into that,
like that would definitely, even if I did, it wouldn't dictate where I live. That's for sure. Like
yeah.
I would.
Anyway, so that's a lot of fun. So that gives you an idea of some of the better states to move to if you're looking for low
What's
cost of living. Go ahead.
what's the most expensive country to live in? We're
Ooh,
26. I
most
wonder,
expensive country.
is it
I
is it
can
Luxembourg, Monaco?
I think it's Luxembourg, but let me check.
And those are like
And there's
city countries.
okay, so 10 most expensive countries according to someone. Let's have a
The
look.
internet.
These things on the internet are never okay. So here we go. Monaco. I think it's Monaco. Highest cost of living. Here we go.
Yeah,
10
okay.
most expensive. Monaco is the most expensive for something for living costs. Then you got the Cayman Islands, Switzerland, Ireland, which is kind of peculiar. I don't know whether that's
It seems a little off.
yeah, that seems a little. I mean, Monaco definitely is up there. Luxembourg is up there. Um, yeah,
I was just curious because if we're 26, what's above us? I
right.
mean,
Well, yeah, a lot of places, I think. Although if you lived in a major city in the US, you're probably up in the top 10 easy. But if you
oh
live,
yeah,
you know,
New York City and Monaco are probably similar, but
right.
that's I mean, that's about it. We're 10 on this map that you're showing here on the screen. Who's got this one? Who's this from?
This is the same people, the same survey that had the most expensive states. This is
Oh,
the
okay.
global version of the countries. Yeah. So the US is one of the most expensive. Let's talk about this new song royalties exchange because I was really interested to hear about this.
All right. So I was in Michigan a few weeks ago, and I was meeting with some friends, and they were talking about IPOing their music, and I was like, "What are you talking about?" And they were like initial public offerings for music, and I was like, "So you're selling your music on the Nasdaq or the New York Stock Exchange, the Nikkei? Like, what are you talking about?" And they didn't really quite understand it fully, or at least they couldn't explain it to me at that point. So I kind of just started to do my own research, and I found out like there's this company called Songvest that was formed in March 18th, 2021. And what they do is they get the royalty rights to a song, and then they take that and they're able to sell it to investors and fans who can now own parts of their favorite songs.
It's
So
really cool.
instead of it just being like a company that sells shares and owns things privately and you buy shares of pieces of their separate companies or anything, it's legit security exchange, US Security Exchange Commission's certified company. So this is the first royalties exchange. Now they base their money, or they base the royalties on like an auction. So they do this first step where they'll auction off your rights to ownership. So with music, you can be a producer, you can be a publisher, you can be a writer, you can be an artist, right? And each one of those persons or individuals, businesses is going to own certain pieces of that song.
Right.
And
Yeah.
so the
As
artist,
performance rights as well as for the writing of the song.
right? Yeah, and the streaming rights too. So it's like
Yeah.
usually the streaming rights are split between everybody. Sometimes the artists write their own music and produce their own music, and there are the Chris Stapletons and the David Lees and the you know different artists, the Eminems of the world that write, produce, and create their own music, right? So that's and Kanye West is another one too. But so what these guys did is they'll take a song, say you want to auction off your song, and they'll put it up for an auction, see what the units or shares that they can sell, and then they'll determine if that they should do a public offering for your music. Otherwise, they just do like this auction thing. Now, they pay you every quarter based on the revenue from the royalties and the shares that you own. So if you have a song, I don't know, just to make something up, if you got a happy birthday song that's done by Elmo, and you some whoever produced it's got 20% shares and they decided to sell it on Songvest. Now me and you, Ben, we can go buy a unit or as many units as they offer, how much we want to spend, and then every quarter it's going to say Elmo's happy birthday song produce this amount of revenue on Spotify, Tidal, Apple Music, Amazon, and we're gonna get a breakout check based on the shares that we own.
So it does it's about cash flow, right? You
Yeah,
get cash flow. That's awesome. Because there's a lot of these sites now that are similar to this. So you've got Masterworks, which lets you do a similar thing with like paintings that cost millions of dollars, right? You can buy like Banksy's and Van Goghs and whatever on Masterworks, fractional shares of
right.
paintings that cost several million. There's another one it's kind of interesting called Vinovest, which lets you invest in wine and they store your wine for you, and then they curate it and they when the bottles mature, they sell it. So this is Masterworks, and they basically, but Masterworks, you don't get cash flow. You only get paid when they sell it. And they've had some pretty impressive exits where they've got like 30-40%, selling a painting on the market. But yeah, you don't get cash flow every quarter. So this Songvest is pretty interesting, because
Well,
if you invest in a big song,
yeah, well, you invest in a hit song or 20%, like they just had Nas's Affirmative Action, which is a song that was really popular. They had like the writer's share or something auctioned off. So you could have bought a piece of that. And they've got all
wow.
kinds of different artists. And the thing
Oh
that
yeah,
really,
this is Vino Vest and Whiskey Vest. So yeah, you can invest in wines and whiskeys. The guys in Tennessee would love this, actually.
yeah, right. This would go great in Nashville. So, um, but the thing that stuck out to me about Songvest is that their security exchange. They're governed by the SEC.
Wow.
Which is like all this other stuff is like, to me, this the wine and whiskey, it's like almost like crypto, right? It's like here nor there. Who knows how it's gonna really work out? Like, but if if it's SEC governed, these guys can't
Yeah.
play games. They'll get shut down.
Yeah,
So
that's awesome.
so the only thing that I was thinking about, and I haven't seen anything, but if I want to sell my shares on the open market, then you start to see the price fluctuations go up and down based upon who holds, how long they hold their shares. And now you start to get like that dividend effect plus the shareholding effect. I mean, this
Yeah.
song
The same
vest
as
could really,
stocks, isn't it?
yeah, it
Uh,
would it would turn into a stock. And it
Growth
would,
plus dividend. And what if you hold it for a year, do you get short-term capital gains on it, I guess, right?
yeah, I would assume so. It's a part of the SEC.
Long-term, sorry. Long-term capital gains. That's
Long-term
what I meant.
capital gains. Yeah, that's
Yeah.
what I would assume so. Yeah. But it's really interesting. They can actually they do this auction part where it determines how much the song could potentially be worth, and then they don't even have to do that. They can use their internal team to determine its worth, and then launch it. And once the shares are purchased, they'll distribute the royalties to the shareholders quarterly.
That's awesome.
Yeah, so it's pretty cool that it's an actual exchange and not just like, hey, we're gonna invest in this random artwork and hope it gets sold, or some NFT stuff, or some crypto stuff.
Remember NFTs? I don't hear anything about NFTs anymore.
Yeah,
I think AI took over from NFTs. NFTs
no,
were like the
no,
hot thing for like a year, and then now it's AI.
yes,
Yeah.
the ape NFTs took off, man. Whoever had was on top of that was killing it.
Well, except for the people who bought them at the top of the market and lost like 90%.
Yeah, that's painful.
Some
I
pretty
didn't
big
put it.
names lost a lot of money, although they have bragging rights now. But
Yeah,
you know,
I don't I don't really I didn't get involved with NFTs at all. I didn't buy one or do anything.
I had a little bit of fun with a few, but I never sold any, and some of mine went up in value. Like I bought this NFT for like $50 or $100, and it went up to like $800. Um, but I never sold any of it. So I
It
don't know.
was
It was just a little bit of fun. I had one friend who was really into it. This guy out in Vegas, and he was making a lot of money on it, but I think he wasn't really selling them. He was just holding them, and I think in the end he did lose a lot as well.
Yeah, I got
So
burned. I'm gonna probably I opened a Songvest account,
there
uh,
we go. Board
and
Ape Yacht
then
Club.
yeah, this was the one that actually had some staying power. Um, the Board Ape Yacht Club. There's still substantial worth there for those. But I think for Songvest, I'm gonna turn around and probably do it a little bit, and we can revisit it later and see if what kind of returns I get on the shares for the music. The shares are like $100,
Okay,
and there'll only be like 250 shares or 350 units. They call them units. I'm sure that has to do with the SEC and,
right,
and,
yeah, yeah.
and how it's
A-
organized. You know,
Approved language
yeah,
compliance.
exactly. So, and then I wonder if I own the share, can I resell the share? That's what I was really trying to figure out, and I couldn't get to the bottom of it. But
Well,
if,
even
if
if it's an exchange, in theory you can, but you need to hope that there's enough liquidity on the market to be able to, enough
Exactly.
demand.
Right. And that's I there it's only started in 2021. I'm pretty sure they only moved forward recently, but you could go to like past sales and it's mainly a hip hop community I noticed, but I don't think anybody else in the music industry even knows it exists, you know.
Right. Oh,
So,
nice.
yeah.
Yeah.
Right, that's what I was talking about, a affirmative action song, like it's a famous song, Beyonce.
Yeah.
So, um it's interesting, to think about. I'm gonna explore it and see what it has to offer, and then go from there.
All right, let's we got one final topic today. Let's check out this final thing. Is pretty interesting. On Tuesday, Iran announced a 2-day shutdown. Why don't you tell us why that was?
So Iran, they can do whatever they want. They do whatever they want. They have sanctions on them because of doing whatever they want, and they decided that it was going to be too hot to function in their country on Tuesday or on Wednesday and Thursday this last week, and they shut down their entire country because the temperatures were expected to reach 123 degrees Fahrenheit.
Wow,
That's
that
really
is
hot.
hot.
But when I think about it, Arizona got up to 122 degrees recently. They didn't shut down. People probably didn't do a whole lot, but it didn't shut down. I mean, it was 100 down here where I'm at in Florida. Nothing shut down really, but 100 is not 122 either.
I guess
So
it's kind of similar to a snow day, right?
yeah,
They get a heat day.
yeah. But their whole country's pretty much in the desert, so it'd be like the
Not
United
just one
States.
region.
Yeah, it's not just one region. So they shut down, and I started to think, how much money does this really cost them? And then I started to research it, and largely it has to do with power outages. So their system can't handle the overload of people doing their daily day-to-day businesses
When it's
with
too hot.
that amount of heat. So what happens is in March 2022, there were power outages across Iran because of the heat, and and what ended up happening is they lost $7 to $8 billion in oil production because of those power outages. And so their GDP, well, last year was $389 billion. So for them shutting down for 2 days and not affecting their grid, well, now they only lose 2 billion and not 8 billion, or whatever the case may be. So,
Right.
on a financial point of view, I think it was pretty smart. Obviously, I would hope they want to keep their people protected, but um, I was looking into the GDP of Iran too after I started doing some research, and their GDP in 2012 was $644 billion, and
In
I was like,
2012. So it's
yeah,
gone down about a third.
yeah, or more. It's almost halved.
Wow.
Yeah, it's almost halved, and I was trying to figure it out, and it has to do with sanctions and everything. But I'm gonna guess that their oil production was through the roof in 2012, and that I remember in 2012 gas prices were like at an all-time high. Now we're just kind of used to that pain, so we don't really talk about it anymore.
I
But
see.
back in 2012, I remember filling up a car that was normally $20 for like 65, and I was like, "What?" So, you know, eh, that's that's what I think happened there. I didn't really research it too much, but it's one of the countries where you see their GDP drop significantly,
Yeah.
and it has to do with sanctions. But interestingly enough, a country like Iraq gets a lot of the gas that powers their country from Iran, and now Iraq for the last 2 months is experiencing power outages because they can't pay Iran because of the U.S. sanctions. So get
Oh.
this: we invade your country, we say we're fixing it, we leave your country, we put sanctions on the country next to you where you buy all your energy from. Now there's power outages.
Iraq's probably like going and paying China, and then China's paying Iran for a fee or something.
Yeah, it's ridiculous.
Yeah.
We just should have washed our hands of it and said, we're just going to leave you alone. Like, why? So it's just I kind of feel bad when I really look at the whole scenario there. Can you imagine being an Iraqi citizen? You're like, all right, Saddam was crazy, and you guys burnt my country to the ground, and then you handed it back to these crazies, and now we can't even keep our lights on.
Yeah, yeah, it wouldn't be a good situation.
No,
No.
it's horrible. So yeah, that's kind of the interesting things I stumbled across when I was trying to figure out how much money they were set to lose to close down their country. And the truth was, is they're going to save some money by
It's a
closing down
smart
their.
move,
Yeah,
like having a snow day,
yeah,
as a heat day.
yeah.
Guys, I think that's where we should leave it today. Heat days, pretty cool. It's been pretty hot over here in the last few weeks, um, but nothing compared to 123 Fahrenheit. Guys, if you're listening to us on any of the major podcast platforms, do give us a 5-star rating. Do share Dirty Money with your friends. It really helps us out, helps us grow the show. If you're on any of the micro content platforms like TikTok, Instagram Reels, or YouTube, do follow us at Dirty Money Show is our handle. And we'll be back next week, won't we, Mike?
You better believe it.
See you next time on Dirty Money.